The Lohr Company has the following errors on its book as of December 31st, 2020. The books for 2020 have not yet been closed. In 2020, fully depreciated equipment with no residual value that originally cost $8,000 was sold for $700 as scrap. The company credited the $700 proceeds to equipment. And so we need to prepare the journal entries to correct these errors at December 31st, 2020, and we can ignore income tax. So we'll start with what the journal accidentally was, as well as what it should have been, and then use that information to figure out what our correcting entry should be. So over here on the side, let's just say the accidental. So it says we sold it for $700 and credited the proceeds to equipment. So that means that we must have said cash, equipment, I'm gonna scoot over actually, for $700. But it should have been, let's just say correct, would have been to say cash, accumulated depreciation, or equipment, and gain on the sale of equipment. And so we should have said cash for $700, accumulated depreciation for the full $8,000 since it's fully depreciated. We should have credited equipment for the full $8,000 and shown the gain on the sale for $700. So this is what the journal entry should have looked like, but we accidentally just accounted for cash and equipment. And so what we can see that we're going to have to do to correct this is deal with the accumulated depreciation of $8,000 and the gain on the sale of $700, and then the equipment was partially credited for $700, but it needs to be $8,000, so we have to make up for the amount that's missing. And so to correct that over here, we'll pull these three accounts, the accumulated depreciation, the equipment, and the gain on the sale, and the accumulated depreciation needs to be for the full $8,000. The gain on the sale needs to be for the full $700. And then the equipment, we could obviously say $8,000 minus $700, but over here we can see it should have been $8,000. We already credited it $700, so we can do it according to these journal entries and get that same $7,300. And that corrects this accident, and it really turns this accident journal entry into this corrected journal entry. So B says, on January 1st, 2019, the company recorded the purchase of equipment in exchange for a 3-year non-interest-bearing note payable in the amount of $10,000. Interest rates were then 8%, but no recognition was made in this fact. The present value of $1 at 8% for 3 periods is 0.7938. And so we'll do that same thing on the side here. So we accidentally said equipment and notes payable for $10,000 and didn't deal with the interest that applies here. So what we should have done was said equipment discount on notes payable and notes payable. And so the notes payable should have been the $10,000. The equipment should have been, we'll use the present value function, 8% 3-year period, no payment, future value $10,000. And I think it, did it tell us to round? I don't think so. And so we have a discount of $2,061.62, depending on, oops. Okay. So that's what the journal entry should have been on January 1st, 2019. And we also have to deal with December 31st, 2019, because if they didn't do any of the interest, that means that they also forgot to do the interest expense and discount on notes payable at the end of the year. So we have interest expense, discount on notes payable, and that's going to be equal to the interest expense will be equal to our $7,938 times the 8%. And then December 31st, 2020, we'll have the same thing, interest expense and discount on notes payable. And this time we'll do our $7,938 plus the $635, close parentheses, times the 8%. And so, whoa, sorry about that. So now we can see what the accidental journal entry was, just a single one on January 1st, 2019, but we really should have had these 3 entries taking place. So we can compound that to figure out what the journal entry should look like to get this corrected. And for example, we can see that equipment was debited for $10,000, but it should have only been debited for $7,938. So we know we need to credit the difference. And then our notes payable was credited for $10,000, and it should have been credited for $10,000, so that's not a problem. And then we need to deal with this discount on the note, all 3 entries, so the debit and these 2 credits, and also the interest expense from 2019 and 2020. And the other thing to keep in mind is that since the 2020 books haven't been closed yet, we will recognize this interest expense for this current year, but the interest expense from 2019 has to be adjusted to retained earnings because interest expense from 2019 was already closed out to retained earnings. So over here, we know we need to deal with interest expense. We know we need to deal with that discount on the notes payable. We just identified retained earnings for the interest expense from 2019. And we also need to credit equipment for the difference of the $10,000 and the $7,938 so that we can pull it down to the $7,938 balance. So let's start there. Our debit of $10,000 minus that $7,938 is a credit for $2,062. Then we can come over and pull the interest expense for the current year, 2020, for $686. The retained earnings is for the interest expense from 2019, so that's $635. And then, of course, we could solve for our discount and it's payable just by subtracting those out of the $2,000. But we can also come over here and see that we had a debit of $2,062, and we've now credited it for $635 and $686. So if we subtract those out, we get $741. And down here, I'll just do a quick sum function. And we see that we get that same $2,062 balance. So our debits and credits balance with each other. And so that's taken care of. And so I really do think that doing the breakdown of what the accidental journal entry was and then what the correct journal entry should have been will really help you with identifying how to do the correcting entry until you get more comfortable and more familiar with doing these error corrections.